you click on new search or edit one of the existing searches, what you'll actually get is a search screen. And at the bottom of the search screen, there is a button called Advanced Search. Now, if you open this Advanced Search and you scroll to the very bottom of the Advanced Search, you'll actually see a section called Patterns. Now, this section, Patterns, shows you the types of chart patterns that Autochartist identifies. Okay, so these are the chart patterns. So we have the ascending and descending triangles, the regular, what we call triangles, those are symmetric triangles. There's channel ups, channel down, falling and rising wedges, rectangles, head and shoulders, inverse head and shoulders, triple tops, triple bottoms, flags, pennants, double tops, and double bottoms. Now, what you'll notice immediately when you look at these patterns is that some of the patterns are based on trending lines, and some of the patterns are based on horizontal lines. Okay, so that's a very, very clear distinction. So even if you look at, let's say, for example, the difference between a rectangle and a triple top and triple bottom, okay, very similar in nature, except one extra turning point in them. So they're almost the same kind of pattern, although in literature there is definitely a distinction between rectangles or triple tops and triple bottoms, and there's similar analogies to other patterns as well. Okay, so for example, if looking at channel up, let me quickly get a pen. If you're looking at channel up and rising wedge, right? Those are very, very similar in nature. In both cases, the trend lines are sloping upwards. It's just that in the one case, in the channels case, the trend lines are parallel. The rising wedges, the trend lines are converging, and similar thing happens with the channel downs and the falling wedges. So I guess what I'm trying to say is that perhaps what I'm trying to say is that the patterns are very similar in nature, and don't get caught up in the names of the patterns. Rather look at the formation itself. The reason we name them differently is because Autochartist tries to comply with kind of accepted literature, technical analysis literature, but it's important to understand primarily the difference between trending and non-trending patterns, as well as what I'm going to talk about next, which are consolidating patterns. Now, let me erase those drawings and let me show you something else. So now let's look at some examples like the ones we've got on the screen here, the ascending and the ascending triangle and the triangles, as well as a descending triangle. If you look at those kind of patterns, those are what we call consolidation patterns. Consolidation patterns means they are being squeezed, right? Now, so that's very distinct from patterns that are trending. Okay, for example, you cannot compare it to a channel, a channel up, right, where the price is actually not being squeezed between support and resistance. It's actually just trending. The price is just trending upwards or downwards, right? Let's look at some examples in Autochartist itself. I'm just going to cancel the search. Okay, the first example that I've prepared on my screen already is this pattern on US dollar Japanese yen. This pattern was identified on 60-minute candles, and I'll get my pen quickly and highlight what I'm saying. So each of these candles is 60 minutes in length. It was the formation was made over 76 one-hour candles. Okay, and Autochartist provides a bullish forecast on this. Because the reason why it provided a bullish forecast, because there was a breakout through a resistance level. Okay, this was a continuation pattern. Continuation, meaning that the breakout, which was bullish, is in the same direction as the initial trend of the pattern, right? So that means there was initial trend of a bullish trend, then there was the pattern, and then there was a bullish breakout. This is why this is called a continuation pattern. Okay. Now, if you notice, I see. Sometimes I keep an eye on some of the questions. So if you don't mind, I'm going to interrupt the webinar with some of the questions. And William is asking, what do you mean by length 76? 76 candles mean that the pattern, there's 76 candles that have formed this pattern, right? So that if you think these candles are made of 1 hour candles, right? So that means that this pattern formed over approximately 3 days. Now, for me, that's quite an important indication because, yes.
Sorry to interrupt you.
Yes, sir.
The sound does seem to get quiet and soft every now and then. Is it the internet, or is it your microphone?
1 second. Let me change my settings. 1 second.
Okay.
I'm just going to quickly readjust my headset. Is that better, Errol? Like this? Errol, 1, 2, 3.
For now it seems okay. But other than that, it's probably just the internet that we can't do anything about.
Oh, I'm really sorry about that. That's a bit strange because I do have high-speed internet. So maybe I can talk. Is it the volume, or actually it cuts out?
Yeah, it doesn't cut out. It just goes a bit softer. So it is.
Okay.
We can hear what you're saying. So I don't think worry about it too much.
What I'll do is I will just speak a bit louder, and I hope that makes things better. Okay.
Okay, great.
All right. Let me know again if it fades in and out, and then I'll increase my volume again.
Okay.
Okay, because my volume indicator is showing that I'm in the red here, so I don't want to scream. But
yeah, it sounds good now. So carry on.
Sounds good now. Okay. Yeah. All right. Cool. All right. Okay. So back again to what I was saying. So we were talking about 76 candles. So this pattern was formed over 76 1-hour candles, which means that it formed over approximately 3 days. You know, assuming that there's 24 hours in a day. Which they are, of course. That was silly. Okay, so what I mean is, actually, the reason I said that wasn't that silly. It's because there were 24 trading hours in the forex market, right? So if you were looking at a pattern on, let's say, an equity on the New York Stock Exchange, if you had the number 76 candles, that would be a lot more than 3 days because there are only 8 trading hours on the stock exchange. Right, so that's the reason why I just wanted to highlight that this got specifically to do with the forex market. So now one of the reasons that is very important is actually because you must remember what chart patterns are actually based on. Chart patterns are based on market psychology, right? So if you showed me a chart pattern whose formation length was 30 minutes or an hour, I personally would discount that kind of pattern because I don't believe that market psychology plays out in a matter of minutes or hours. I believe it plays out in a matter of days. So certainly, in my experience and my opinion, that the longer term patterns where you see very distinct support and resistance levels, right, those are certainly a lot better from a projection perspective. Okay, obviously, past performance isn't indicative of future performance. That's my little disclaimer, right? But certainly, our observation are very in line with accepted technical analysis literature. So, in fact, there are some purists, technical analyst purists, that only look at daily candles for in their technical analysis. However, I think that is unrealistic, especially when one looks at highly volatile instruments like forex or commodities or futures or indices, whatever you're trading, which is highly volatile. I think there are a lot of good intraday trading opportunities, and so that's why Autochartist does its analysis all the way down to 15 minutes Although again, personally, I don't look at anything under an hour. I occasionally look at something on 30-minute data, but primarily on hourly and longer. But I also think there's lifestyle reasons for that. Yes, I trade a lot, probably more than most people, but I also have a job to do in my life, and I'm sure all the rest of you also work for a living, and so sometimes I find if I take very short-term positions, it doesn't really fit in with my lifestyle, because then I have to sit with my trading screen open the entire day, and it just it doesn't work for me. I just get stressed out. So I certainly like to take many kind of medium-term positions. And Steve does ask a very valid question there in terms of, do I use lower time frames to determine entry and exits for an hour? And that is certainly the case. I think the idea around technical analysis is that you look at the bigger picture. Certainly, this is the way I do things. I look at the bigger picture. If I see a long-term trend happening, then I definitely look at the charts on lower time intervals in order to get my timing correct. And sometimes I don't actually rush into the market. In fact, most of the time I set a pending order, either a stop or a limit order, in order to get into the market at an appropriate level that I'm comfortable. Many people are just trigger happy. They just kind of see something and they just point and click and execute. I'm a little bit more reserved and thoughtful in my methods. But again, everyone finds their own style. Okay, let me carry on. I got stopped at the candles. Okay, so one thing I want to highlight here, that's very important, and the primary reason why I actually prepared my screen on this chart pattern specifically is the section I circled right now, which is the breakout. So Autochartist provides a whole array of what we call visual quality indicators, initial trend, volume, uniformity, clarity. These are visual quality indicators which I'm not going to go into right now in this webinar. They need a whole new webinar on their own. But the one I want to focus on specifically with this example is the breakout, and this is one of the ones that I use in my trading. Now, what I'm going to do is I am going to zoom into this image by clicking on it. I'm going to wait for all that to come up on your screen. Okay, so you should see a big image on your screen now. Let me just give that a moment. Errol, I don't see my screen updating coming through. Is it coming through on your side?
Hi, Alan. Yes, sorry about that. Yes, it is through. I do see the larger.
Okay, all right, good. Okay, for some reason my webinar, we seem to have some issues with the software. My webinar software isn't telling me that it's gone through to the audience. Okay, so sorry about that, everyone. Some technical difficulties today. So if you notice now, on the screen, I have a big chart, and you will see that this candle over here that I'm circling now is big. It is very, very big. There's only a few occurrences of such large candles throughout the formation of this pattern. Okay, very unusual type of movement, and that for me is a very strong indication that the breakout through this level of around whatever it was, 107.35 or so, is very distinct. Okay, so and that is something which I look for. So if a chart pattern just touches a support or resistance line and doesn't really break through very convincingly, I certainly, in my mind, I certainly discount it quite a bit. Because again, I always come back to thinking about what is the underlying theory of chart patterns, right, and support and resistance. It's about important psychological levels, right? This is what makes chart patterns different from all other indicators. Some of you might be using moving averages, some of you might be using RSIs or MACDs, and those are all just arithmetic equations. Right, chart patterns are about market psychology, right? And we can see very clearly in this example that this level has been hit numerous times, right? So before this breakout, it hit this level 3 times before a very distinct breakout through the resistance level. Okay, and so for me, this is a pattern which is certainly needs a lot of consideration now to trade, right? So certainly something I would put on my radar, this USD JPY opportunity. Although when I brought up my MetaTrader screen just a few moments ago, I see that I missed this opportunity by an hour or two, and that's something which I want to bring in right now. Is that I am actually in US Central Time, so it's around 20 past 8 right now for me in the morning. The majority of the large moves in the forex market certainly happened during the European session. Okay, so I'm also not surprised that I missed this opportunity by a few hours. But certainly those of you who have been awake for the last 4 or 5 hours have seen this opportunity being alerted on your Autochartist screen as it actually happened. So I think it's Mitchell. He's asking how to learn more about the visual quality indicators. Mitchell, I refer you to the help section in the Autochartist application, and the Errol and Yvette, who are on the line with me now, they can actually help point you to a user manual to learn more about them. But certainly they warrant an entire webinar on their own. So I'm not going to go into them right now. I apologize for that. And now Modkir, I think, sorry if I pronounced that wrong, Modkir, you were asking whether you would wait for the price to test that level again. So what we're asking for, what one of our audience members is asking for there, is whether we should wait for the price to come back down to this level and then shoot back up. So now this is the million-dollar question, and there's no right or wrong answer. My experience has been that after a very large movement, there is almost always a small retracement. However, I don't believe that this type of movement that we've had over here over the last kind of half a day, 12 hours or so, has been exceptionally large. Would I wait for a retracement? Probably not. If I saw a massive movement in the last hour or two, then I would expect a retracement. So right now, it's not something that I would expect at this moment in time. Okay. So let me erase all these drawing objects. Okay. Now I mentioned briefly a second ago about this opportunity appearing during the European session, and as you notice in this webinar, Autochartist provides its services to many very strictly regulated brokers around the world, and so obviously Autochartist cannot tell you what to buy and sell, right? All we do is provide you the research, the identification of the support and resistance levels. But what we try and do in these webinars is kind of drop hints and tips and give you education around what works and what doesn't work in the market. And so I hope you're making notes with regards to what I'm saying in terms of our experience, in terms of what works and what doesn't work. And the next thing in the same light, what I want to talk to you about is which patterns are the most effective actually in forecasting price action. And again, the disclaimer is that that's based on past experience, and sometimes past experience is not indicative of future experience. Now, what I'm doing is I'm actually bringing up the search criteria button again, okay? And again, I want to come back to the trending versus non-trending patterns, but the ones I want to talk specifically about are the patterns that have been formed with some horizontal level involved. So I'm talking about ascending and descending triangles. I'm talking about head and shoulders and inverse head and shoulders. I'm talking about rectangles, triple bottoms, triple tops. Let me scroll down a little bit. All these patterns at the bottom: triple bottoms, triple tops, double bottoms, double tops. Right. So all the patterns with horizontal levels, and you can actually select just those by clicking on horizontal levels. I don't do that. I look at everything, right? I like my Autochartist to bring me back everything that's available. But if you just wanted to look at horizontal levels, you would just click on horizontal patterns, and those would select the appropriate ones. Now, the reason I'm focusing on horizontal levels is because they are by far, historically speaking, our top performers. There is something about the horizontal support and resistance levels that seems to work in the market, and I think that's because people like you and I, traders like you and I, both professional and amateur and novice, all understand horizontal levels very easily, right? So if I looked at this, I would ask most traders, what does this blue line mean? And they would struggle to tell me what it actually means from a psychological perspective, right? What is the market doing by consolidating like that? Whereas if I ask most traders, what does the green line mean? They will tell me, oh, it seems to be a point where the market thinks the price of US dollar against the Japanese yen is too expensive. Right? It's easy to understand because as the price gets to that point in the market, right, to get that price level, the market seems to retrace back again, right? It's a clear indication that the market thinks the price of the yen is too expensive at that point in time. So it kind of simpler to understand, and one kind of tries to rationalize why the horizontal levels seem to be a lot more important. So if you're trying to in your mind's eye filter out which are the most important chart patterns to look at, I would certainly look at the ones which are made of horizontal levels. So here's another example. This is the one that Errol was talking about earlier about the US dollar ZAR, right? Here's a support level on Euro AUD that you should look at. Resistance levels, ascending triangle, that's the one we were looking at a second ago. Then you could skip over the falling wedges channels and then look at the resistance levels again, right? And so you can go through Autochartist and see what actually works for you. Here's an inverse head and shoulders. Unfortunately, it's on an exotic pair. But certainly many opportunities for you to look at, which are based on horizontal levels. Okay. Now, of course, it's one other factor, and we only have a few minutes left to go. But the one other factor that I want to talk to you about is the phase of the market. Okay, so the phase of the market is critically important. Sometimes you're in a trending market, right? Sometimes you're in a sideways moving market. Certainly, in the last few months, the volatility has been very low in the FX market, and so one would strongly consider looking at these kind of sideways patterns, like I've been talking about now. One's based on horizontal levels. However, as soon as a trend in the market starts to form, one can certainly start looking at the more trending type of patterns, right? So, for example, Swiss franc, Japanese yen example, there's a bit of a trend over here, although I think the length, as I mentioned before, the length is very short. So that's something that I might discount for myself. Okay, so I might try find something a little bit longer. Okay, here is a rising wedge on pound Swiss franc, a rising wedge which has formed over 228 daily candles. Okay, so this is certainly worth a look. And what I'm going to do is I'm zoom into that quickly, and you can see that the price of pound against Swiss franc has been in a long-term bullish trend, and over the last week or two, there has been a sharp decline, right, in the price of that instrument. And then, as I mentioned before, when there is such a massive movement, right, one should expect a retracement. So if I looked at this chart pattern a week ago and you asked me, Ilan, would you trade something like this? I would say, you know what, this has been an exceptionally big movement. The markets don't just move in one direction. Markets move up and down. You have to wait for a retracement. And so this is exactly what has actually happened. It's actually retraced a bit, right? And it's moved up again. Now we don't know, is it going to come back down again? Is it going to back up? But certainly after a very massive movement like that, it will be a huge ask for the market to continue the move in that same direction. And certainly I would keep an eye on pound against the Swiss franc for a few days and see if the price starts going down again, and then a short position on that would definitely be on the cards. Okay, let me handle some of the questions. So Steve asked a great question. Does complete means it's hit its trigger? Yes, so complete means, actually we're going to be changing the wording soon, as Steve, on that. Complete actually is going to be renamed to breakout. Okay, there's a bit of a misunderstanding with some of our terminology. It just means completed means there has been a breakout through support or resistance, and emerging means approaching. It means it's approaching a support or resistance level. And what I mean by that is, if you open up the results filter section, you can actually enable to see Autochartist to show you emerging patterns. And let me try and find something on a kind of non-exotic pair. Here is an example of a good example of a channel up, right? A rising channel on New Zealand Japanese yen 15-minute candles, and Autochartist has identified the turnaround. And Autochartist thinks that there's a possibility that the price is moving back down to around 84.49, so back down to this support level. Would I trade something like this? Definitely not. Do you want to know why? I'll tell you why. Firstly, it was formed over 22 candles, 22 15-minute candles. That means the entire formation here is just a few hours. Firstly. Secondly, the size of the opportunity is too small, right? It's 10 pips or so. The opportunity is way too small. What would I do in a situation like this? I would completely ignore it, right? But that's what I would do. If you're with a broker that has super tight spreads and you're timing the market and you see it as the signal comes through, then you might be able to take this type of opportunity. Okay, certainly I open my Autochartist, I would say, about 3 to 4 times a day. I would miss this. You miss this by a minute and you're done, right? This opportunity is gone and past. And so this is something that I wouldn't I wouldn't trade, but it's a good example of what we call an emerging or approaching pattern, right? It's approaching the support or resistance level. Okay. So we're on about 30 minutes, and I just want to spend a few minutes just answering some questions. Errol, while I was busy talking there, I saw a whole bunch of questions streaming through, so I'm a little bit behind. Would you mind just highlighting a few that you think would be important for me to answer?
Okay, sure. I don't know if you want to deal with this now, or maybe we can follow up with him. But I think there's two people that are asking about how does Autochartist actually project the price, and how does Autochartist choose which direction a trade's going to go?
Yeah, sure. Okay, let me talk about that briefly. Okay, I'm just going to switch some things off so that I can focus on something that I'm actually. Let's. Why don't we look at that one that we looked at before? Where is it? There it is. Here's the one we were looking at before. Okay, so how does Autochartist calculate this price? Very, very simply, actually. Autochartist, remember, Autochartist is not anything new. It's not a new invention in the market. Autochartist is just an automation of chart pattern theory, which has been around since the 1930s. It is not a black box that it performs voodoo magic, okay? It is just an automation of an existing chart pattern theory. So what Autochartist does is quite simple. It looks at the initial trend and maps that onto the breakout, okay? And then scales it. Okay, so this size over here was however long it is, so it's probably up to here. And then what it does is that it scales it by the visual quality. So it brings it down a little bit. Okay, so the initial kind of the raw forecast would be around 108, and then Autochartist scales it down to just under 108 to 107.90. Okay, because of the actual visual quality of the pattern. So the methodology of providing the projection is just an automation of existing chart pattern theory. So if you open up any book on technical analysis, they will tell you to do exactly the same thing. So I hope that's a quick and simple answer.
Thanks, Ivan. And then there's a few questions. Let me just see here. I think there's also quite a few questions about, what's the best chart hour to trade? What's the
Okay. So we provide a section called performance statistics. It's out of the scope of this presentation, but certainly if you click on the performance statistics section on the website and we provide statistics on chart patterns, key levels, and approaching key levels. The reason we only provide it on those three is because those three are the only types of patterns on which we provide a forecast price. Okay? So that is how we measure whether the forecast has hit its level or not. Okay, so we have a running window, and if I click on Forex, these are statistics for the last 6 months. Past performance is not indicative, might not be indicative of future performance. I just want to let you guys know it's a moving 6-month window. So the patterns that have been performing well over the last 6 months are ascending triangle, channel up, channel down, descending, double bottoms, head and shoulders, inverse head and shoulders, rectangles. Certainly a big, again, as I mentioned before, a large percentage of those are horizontal levels. We also have a breakdown by instrument, which instruments have been performing well, which intervals have been performing well, and of course, very importantly, the hour of day, which is where the question came in. My stats here are in GMT -4, so it's New York time. So certainly the European session, as you can see, the European session, the performance of chart patterns in the European session is far greater than during any other session. And the reason for that is simple, is that London is the center of the world when it comes to finance. Many people believe it's New York, but it's not New York. Certainly in the FX market and in commodity space, it is all about London. And that's where all the psychology plays out. And certainly that is the most highly performing statistics for Autochartist. Again, it's slightly beyond the scope of this presentation, but I urge you to have a look at those statistics, and it shows you, which are the ones that you want to look at. If your broker provides you the Our Favorites section, then Autochartist would automatically merge the trading opportunities together with the performance statistics and provide you the opportunities that are most probable to hit their forecast level based on past performance. Okay, which again, disclaimer, might not be indicative of future performance. So you can choose your probability and say, okay, these are the 3 opportunities right now in the market which have got a 70% or high, 75% or higher probability of hitting their forecast level. This is 70%. Now, only certain brokers provide the section Our Favorite. It is one of our premium products. But you can achieve the same thing by looking at the trading opportunities combined with performance statistics.
Okay, Lanya, and there's a lot of questions actually about performance stats and about stop losses. So I think stop losses is actually the next webinar, which I've scheduled.
Yes.
And then
Yes.
I think what I'll do is the webinar after that, I'll make it all about performance stats so that you can go into it in detail.
Yeah, because we need an entire 45 minutes for both of those, just to even just briefly discuss them. Kind of to the same level or shallowness that I discussed chart patterns today. But yeah, we need a separate webinars.
Okay, so just to let everyone know that those webinars are coming up.
Okay. Is there anything else, Errol, or do you think we should ask everybody to, because we're already out of time, we're already into 40 minutes. Should we handle 1 or 2 more questions?
Yeah, sure. Let's see something about what you've been discussing. Sure, they were mostly about the performance stats and stuff.
Okay.
I mean, someone is asking, would you suggest that he trades as soon as he receives the signal, or to wait?
Well, first things first is I don't suggest anything. Otherwise my lawyers are going to kill me. Again, for me, let's look at an example. I look at things visually. I look at something like this. What example? This is Swiss franc Japanese yen, 60-minute candle. I look at an example like this, and one asks me, would I trade this right now? The answer is no. Why? Because this was a massive movement, and after a massive movement, there's always a retracement, which is what's happening now. When would I trade this? I would probably start considering trading when, after I wait a few candles, there's been a retracement and it goes back through the 112.80 level. That's when I would start considering looking at this pattern again. So a higher high, yes, that's right, Steve, that's right. So certainly after a big movement, I would look at that. If the movement is reasonable, just looking at things visually, it's not mathematical for me. For me, it's visual. Like I look at these large candles here. If the breakout candle was this size, I would say take the opportunity. But this breakout candle was almost twice the size of the big candles. Man, this is a huge move. You got to wait. You can't. Yes, and of course, there's times when you're going to miss the movement, and that's what it is. It is what it is. You pat yourself on the back and you move on to the next opportunity. It's not like there aren't opportunities in the market. These things are happening all the time. If you keep your Autochartist open, you'll be beeped and alerted every 15 minutes. So you don't need to go looking for the opportunities. They'll come to you. So relax. You miss one or two. Not the end of the world, just take it easy. Don't stress yourself out, about it. There's more and more opportunities coming through, but certainly something like this, I wouldn't take it immediately. I hope that answers the question. Errol, should we wrap it up? And I'm really sorry to everybody, that we didn't get to your questions. You're welcome to email our support guys. They're awesome. They really try to help as much as they can. And sometimes if they don't know how to answer a trading question, they feed it back to me, and you'll probably get an answer directly from me. You just email support@autochartist.com, and we'll try and we'll try and resolve any technical issues or questions. I see there's a few questions about MetaTrader coming up. About how to get the chart patterns on MetaTrader. We can help you there. So any kind of questions, please email support@autochartist.com. Let us know what you're using, which broker you're with, what platforms you're trading with. It helps us contextualize your questions, and we'll be sure to help you. And Larry, to answer your question quickly, because I just saw it coming up, yes, pay attention to the yellow exclamation mark. Those are the latest patterns that have come up. It's just trying to show you that those are the latest ones that have just come up. So if you keep your Autochartist open, it might irritate you a little bit because it's going to beep at you the whole day. But yes, that's the point. Okay. All right, everyone. On that note, I'm going to love you and leave you. I hope you enjoyed this webinar. Thank you very much for your attendance. Next webinar, Errol will be in touch about the schedule for the next webinar.
Shem, thanks, Ilan. Enjoy the rest of your celebrations today with Nikki.
Thank you. Thanks, Yvette.
All right.
Bye, everyone.
Okay.
Bye.
Ciao. Bye.